And we're back here on Live Impact News. It is 2:03 p.m. and we welcome on Patrick Haan from GasBuddy, a regular guest with us here on Live Impact News. Patrick, it's good to see you. How's everything on this Monday afternoon?
No, it's good. Just keep looking out my window at the downpour of rain that's happening here, and guess we have like 6 tornado warnings. So aside from trying to avoid the weather, watching markets as well. Oil prices plummeting this morning, so that's some good news. But if you look very closely at markets, the development is that while oil is down almost 8%, the wholesale price of gasoline is down less than 2%. Of course, we've covered that, I think, in past instances, coming on and talking about refineries. A fresh Ukrainian attack on a Russian oil refinery over the weekend, continuing to put into light how refineries are impacted.
The rain coming down outside, oil prices coming down on the screen. You're monitoring a lot of stuff. We just had one of our meteorologists come in to let us know that there is impending weather in our area as well. So we feel your pain, and we have talked about how some of the disruptions can sort of, maybe when you see crude oil go down, but you don't see the commensurate drop in other places, you go and look to
Yeah.
some of those disruptions as to why that may be the case. We talk about the roller coaster that we've been on here, and we had a long stretch where gas prices did really sort of have a more consistent drop during that memorandum of understanding. Of course, now we have come out the other side where we're sort of back in this more inconsistent roller coaster. I'm wondering, was the stretch that we did have of consistently falling gas prices, was that beneficial to any of the long-term supplies that we talk about? Did that provide any sort of slightly longer runway that we may have where we can sort of survive in the midst of these global conflicts as they've gone on a little further than anyone really expected?
Well, survive, the jury's still out on that, but certainly having the strait reopened, even if it was for a brief period of time, probably did provide a little bit of relief. Now, the U.S. Strategic Reserve this morning fell to another multi-decade low. Keep in mind, that's not new. We've been setting multi-decade lows every week. The U.S. Strategic Reserve now down about 307 million barrels. It probably will fall below 300. But those releases probably will wrap up here in the next, call it 8 weeks or so, by the time that all those oil sales that were authorized wrap up. But as you mentioned, global oil inventories aren't in a great state. And that's why, the market is a little bit ignorant here of global oil inventories, more focused on the weekend pause in hostilities between the U.S. and Iran. And to your point, I mean, even when there is a reopening of the strait, and even if it lasts for weeks, it's probably going to take months of getting oil flows back to normal. Now we've gotten a little bit of benefit of the doubt as well. China has drastically slashed the amount of oil it's been buying. But the bigger question is, how long can China continue doing that? I mean, there's not a lot of transparency with China's own reserve. So we really don't know what state China's oil reserves are in or how long they can go with a massive drop in the amount of oil they buy. All of that to say, I have no idea what the next couple of weeks nor months is going to look like. There's so many different things coming together on the radar all at once. The U.S. and Iran, you have Russia and Ukraine, you have Mother Nature and hurricane season, you have Houthi attacks in the Red Sea. Just a lot on the radar.
We talk about a lot on the radar. I'll throw another thing on the radar for you. As of, I believe today, double-digit tariffs on more than 60 different countries from the Trump administration. How do tariffs like this impact gas prices? What type of effect?
Well, it depends on if there's a tariff on oil. In this case, I don't think the recent rounds of tariffs are going to impact oil, because I think the Trump administration knows if you tariff oil, it's going to lead to higher gas prices. And the Trump administration is probably doing as much as it can to lead to lower prices, not higher prices. But having said that, if the president were to foolishly trump oil or refined products, or another one of the countries that is now tariffed at 10%, if they decide to tariff oil they send to the United States, well, that could be impactful. So, it depends on if there's a direct tariff on oil. For now, most of the oil we get in the United States is from Canada and Mexico. And a lot of that oil and a lot of that gasoline, diesel, and jet fuel still falls under the U.S., Canada, Mexico agreement. So not a lot there, but it certainly could slow down the U.S. economy as well. New tariffs could.
Okay, and we know that everything is so interconnected that as we sort of these different levers are pulled, all of it comes together with the impacts here. You mentioned Houthis in the Red Sea now taking action
Yep.
against vessels that are passing through that critical water passageway. I would say, relative to the Strait of Hormuz, how much of an impact will sort of this new aggression have?
Well, it all depends on how long the aggression lasts and whether it's escalation or de-escalation. I mean, Houthis made some attacks over the weekend, so there are some concerns for the Saudis that are routing their oil through the Red Sea, but we don't know. And that's the biggest thing about all of this is I don't know, you don't know, nobody has a crystal ball on how these attacks are going to continue unwinding. So we can't anticipate something when there's no ability to do so. All we can do is watch the reaction in oil markets. And that's why the road that we've been on for the last 5 months are of oil going up and then down and now back up and down. It's impossible to anticipate what the next move might be. For now, gas prices may moderate slightly as we get to the weekend. But as I mentioned, the price of oil is down 8% today. The wholesale price of gasoline is only down 1.5%. So there's a huge disconnect there. And again, a lot of the reason for that disconnect is Ukraine continues to attack Russian oil refineries.
And then, moving to sort of boots on the ground, how this impacts us here in the United States every day. We're headed towards August very soon here. How busy of a travel month is August typically? And are there any projections that show that there could be a decrease in that travel?
Well, travel usually peaks actually last week. The third week in July tends to be the most traveled period of time. Gasoline demand is at its highest. And now gasoline demand will start to decline as schools get closer to reopening in early to mid August. Demand usually peaks in mid to late July. So we may start to see a little bit of relief as we move towards the end of the summer. But we're not going to see a big decrease in demand just yet. That comes around mid-September when Labor Day is done, everyone's back to the grind, schools are reopened. That's when gasoline demand starts to fall off more dramatically. So, we've already hit the peak, but it's not like oil demand and gasoline demand are going to plunge overnight. They will start to decline now until about February. That's when we hit the bottom and demand starts going back up again.
Okay, Patrick Haan from GasBuddy, we appreciate you very much as always. Anything else you want to add that I didn't ask about you think's important?
Boy, not that I can think of for now, but I would say that the key to understanding where gasoline and diesel prices go in the days ahead, it really lies probably a little bit more so with Ukraine and the state of attacks on Russian oil refineries. But if the situation between the U.S. and Iran continues to escalate, so are the gas prices as well. That's really, I can't anticipate what's going to happen, but any escalation in these situations will escalate prices. Anything that de-escalates these situations will de-escalate prices.
Okay, so two separate major global conflicts that we're keeping an eye on that both impact gas prices. Patrick Haan, thanks for giving us a little bit more insight, understanding into this situation. I'm sure we'll see you again before too long.
Thanks for having me. Appreciate it.
All right, Patrick Haan from GasBuddy, always willing to join us and give us a little bit more of an understanding of what we're looking at, as we all just would like to see more affordability at the pump per usual, and not one but two geopolitical conflicts that are causing those numbers to go up.